I've been investing my own money for more than a decade as an individual, and I've been sharing the journey here on YouTube for over 3 years. However, I've not spoken enough about investing cash when it comes to your business, and as a limited company director myself, I thought it would be worth sharing that journey about what you can actually do with that money. Now, I was shocked recently when I found out that there is around £273 billion sat in company accounts from small and medium businesses here in the UK. And out of that money, more than half is currently earning zero interest. Absolutely nothing at all, just sat there doing zilch. And even the rest of the money that is earning some interest is getting 2% less than larger companies are being offered. This is completely bonkers to me, and as someone who's passionate about helping people get started investing, I think we need to change this and we can all do better. So let me walk you through what you can actually do with your cash in your business and explain how you can do it. This is a journey I've already been on, so I'm happy to share my own experience here and what I'm currently doing with my own business cash as a director of a limited company. Also, it's worth saying that if you're a sole trader, you can also invest your cash too, so you aren't left out either. To help me with some of the details in the video, I've teamed up with Dan Heelan, a business accountant who also runs a really useful YouTube channel, and we'll hear some of his tips as we look at all the options. Right, so first things first, what can we actually do with our own business cash? What are the options? Basically, we've got a few things we can do, and they're quite similar to what you can do with your own personal cash. So we can invest it, we can put it into a savings account, we could invest it into property, or we could even lend it out. Now, each of these comes with its own pros and cons, so let's just work our way through each one. Also, we need to address the big question about how these things get taxed as well, and luckily we've got Dan to help us out with that part later. Starting with savings, as this is nice and simple, you could put your business cash into a high interest savings account. There's quite a lot out there on the market and they all have different rates and different terms for you to look at. For example, you might even find that your current business bank account offers you some kind of interest on your cash already. For me, I'm with Monzo and I don't get anything at the moment, which is why I ended up looking for options in the first place. Now, there's loads of options out there and you can go and compare the market. One thing you'll see is that just like in personal savings accounts, you'll have to choose between instant access and locking that cash away for a certain period of time. For me, in my business, I wanted to make sure that any cash would be available in case I really wanted to use it, so I was leaning more towards something a bit more flexible. Remember that savings accounts are going to work differently if you're a sole trader or a limited company. For sole traders, you can just use any personal savings account, but for limited company directors, we'll want to use a business investing account as the money is technically owned by the business and not us personally. As of the time of making this video, there are some good rates out there, but some of the rates come with time limits or minimum buy-ins. For no strings attached and for instant access, which is what I wanted, the rates are closer to 4% and below. Okay, so what about the other options? The next thing I looked at was investing in the stock market, which is something I speak about a lot on my channel. Now, when it comes to doing this on a personal level, you've got accounts like ISAs and pensions, and you get all the kinds of allowances and tax breaks. However, doing this as a business is slightly different, and you do need to use different accounts. If you do a quick Google search for business investing accounts, you'll see that there are a few options out there from some of the big players in the market. These accounts will let you invest and set up accounts from a limited company. Now, if you're a sole trader, then you don't have to worry about this and you can just use any general investing account as this cash is always in your name. Now, after having a look around and diving into the fees on some of these accounts, I ended up seeing that InvestEngine has business investing accounts and I already use them for my ISA and my SIP, so I thought, was a no-brainer. Not only that though, there were no exit fees, it's easy access, and I knew that they would have a big choice of investments to choose from. Some of the other platforms I looked at carried much higher fees to make investments, and they also had expensive monthly fees that was something I wanted to avoid. Also, another little thing that I found out which applies to limited companies is that InvestEngine also pays for your LEI, which is your legal entity identifier for your first year. This is something that was new to me, but apparently it's a regulatory requirement. Now, it's easy enough to get and it's not exactly super expensive. It's under £50 a year, but why pay more fees when you don't need to? It's a nice little touch, and they'll even cover your LEI fee if you hold £20,000 or more with them for that second year too. Anyway, I opened that account earlier in the year and I moved all my spare business cash straight into it, and I chose to invest in a money market fund. Here's my account on screen now with my actual business money in it. I always like to be transparent with what I'm doing and put my money where my mouth is. Now, I know investing can be confusing and complicated as it is, so let me just explain what this fund is and where this money is invested. Obviously, I'm not your financial advisor, nor can I offer you any kind of financial advice. It's completely up to you what you want to invest your business cash in. Anyway, this fund is a money market fund looking to achieve the SONIA rate, which is short for Sterling Overnight Index Average. It's a fancy term for the rate at which banks lend money to each other overnight here in the UK. So all this fund does is try and track this rate and I'll show you on screen now what the current rate is from the Bank of England itself. As you can see, it's currently at 4.7%. So this fund is trying to track that rate, and then all it does is accumulate those earnings into the fund. I just leave my money invested here, and then over time, as you can see, the value goes up. If the bank rate changes, then this fund will reflect that. So do just remember, it's not a fixed rate, it's a variable rate. Now, there is a small fee, as with any investment, and this fund has an expense ratio of 0.1%. But that's already built into the fund. It's not something you have to pay from any other sources. If I want to take any money out, it's just like any other investment. I'd have to sell whatever amount of the fund I want, wait for that to clear, and then I could withdraw it back to my business bank account as cash. This is another reason I settle with investing things this way rather than going down any other option. I know I'm going to get a good rate, I'm not locked in, and it's a very liquid investment, which makes it very easy to take money out anytime. Now, a little easier, if you want to copy this portfolio and use the same fund, I've made the portfolio public, and I'll also put the link in the description so you can add that to your business account. Obviously, as I've said before, please do your own research to decide what you want to invest in. There's hundreds of options on the Invest Engine platform, everything from the S&P 500 to the FTSE 100 and everything in between. I've decided to go down this route as I want to take less risk, but you're always welcome to do what you like with your own business cash. For example, if I took more risk this year with my business cash and invested into something like an S&P 500 fund, clearly I would have made a lot more money for my business, but then it would have been far more risky in my opinion. Now, what about investing in something like residential property? Well, you can do this, of course, but then things might get a little bit more complicated, especially when it comes to doing this inside a limited company. But let me allow Dan to explain how this might work for you.
I think the other one people like to do is they often like look at property as a potential. And again, I think there's a lot of arguments in the financial world of what's better. You know, is it better just to stick it and forget about it in a in a fund somewhere, or actually do you want to go and invest in property, which is a bit more active, arguably. Now, the biggest issue with this from a structural point of view is quite often you have to consider what's going to happen if the company uses this excess cash to buy that property. So if you've got a trading company, normally you won't want, this is generically, usually, might be different in your specific example, but generically you're not really going to want the property in a trading company. The reason being is there is a world where if that property as a value is so much bigger than everything else the company owns, you can end up being not a trading company and lose some reliefs. Again, that's probably a long another video and another topic, but know that that's an issue. If you're VAT registered and you're renting it, for example, that can also cause you a problem with something known as partial exemption. So you've got to consider that if you're VAT registered. So as a result, a lot of the time, you would often structure it so that actually it's not your trading company with the cash that's buying it. You might slot in a holding company, and you might have seen this term holding company. It's just like another limited company that you structure that owns your trading company, and it pays the cash up in profits, in dividends upwards. And that holding company then buys the property that you want to get involved with. And that's actually sometimes the same with investments as well. So structurally, you've got to consider what you're going to do there to make sure that that all works nicely. One of the key downsides when you do that is what happens is that you've got a second set of accounts and books to run in the holding company. You need to make sure the paperwork's done properly to move the money up and things like that. So you've just got this ongoing cost of having another limited company, but often the protection then is better. You know, if your trading company does something wrong, you get sued, the insurance doesn't pay out, it all goes wrong and it's all tumbling, your property that's over here that's in the holding company is not normally going to be up for grabs because of this issue. So it kind of ring fences some of the risk. So again, structurally, you'll often see that done where there's significant funds to invest.
Investing in property was not something I wanted to get involved in using my business cash, so I skipped this one, but I did want to highlight that it can get a lot more complicated than you realise, especially if investing in property is not what your business actually does. For me, I think it's too illiquid and you can't get your money out fast enough. So this isn't something I wanted to do with my own cash, but go ahead if that's what you want to do. Moving on to the final option, there are schemes out there that let you lend your money in the same way that you can do with an innovative finance ISA as an individual. Basically, you lend your money out to residential and commercial property projects. Now, I've not looked into this in too much detail, and I've got no experience in this at all, but the rates seem fairly decent, and they claim you can get access to your money pretty quickly. But I think this is meant for people looking for more of a long-term play. I think for short-term investing with your business cash, this isn't the way to go, in my view. Okay, anyway, whatever type of investment you choose to make, here's the next big question we need to address. How do the taxes work? Here's where Dan can also explain things a little bit more.
Now, if you're a sole trader, we already mentioned, you're just going to get taxed on whatever income happens. So if you're putting it in a high interest account, it's going to get taxed as interest. So you're going to pay income tax on that. It's a very small allowance at the time recording the video that means that you might get some of it free, but the rest of it's going to be taxed. However, if it's things like selling shares and you're just doing that as and when, it's quite often that it's going to be capital gains. And capital gains rates can be cheaper. And I say can be cheaper, it just depends where you are. They generally are cheaper. They've just changed. But the capital gains rates are cheaper generally than the income tax bands. So that will help. You also get an extra allowance that allows some of it to be free. So at the time of recording the video, the first £3,000 of gains is going to be capital gains tax free. But all this gets sorted out in your tax return. So there's no like weird thing you've got to do unless you sell a residential property that's not yours, say. Then there's like an in-year return. Everything else gets kind of lobbed into one tax return at the end of the year with all of your other income, and it chucks out a tax bill and you sort of pay your tax there. So it's almost a bit simpler. With the limited company, as we said, there is no kind of capital gains tax. There are capital gains tax rules in terms of how to calculate the gain, but it all pays corporation tax with its normally one bill. In a small business world, it's one bill a year that you have to then go and pay. So that's the way the two different things all work.
Right. So in short then, sole traders invest in their own personal accounts and they get access to different allowances like capital gains tax allowances and dividends allowances. But companies are different and all their gains from investing is treated in the same way as revenue would be. So as a quick example, any money you make investing into a money market fund would need to be added to your income as a business, and then you'd have corporation tax to pay. By the way, if you want to get in touch with Dan and his company to help you or your business with your taxes, I'll leave his details in the description below. Now, last but not least, the final thing I wanted to bring up was also the big question: what happens if you make a loss on any of your investments? How does that work? Dan also has our back covered here. Listen in.
Now, if you were to make a loss on the investments, there is some good news from a tax perspective. So if you'll take yourself personally, sole trader, you've invested the money and you've made a loss. So you've had to liquidate the shares for whatever reason that you bought and you end up having a loss. Most of the time that loss then can be brought forward and used against other gains. There are restrictions. Losses are one of the more complex areas of tax. There are restrictions. So for example, if you sold a property at a loss, that's quite a restricted loss that you can use. Normally, you're just going to use it against profits of your property business moving forward. But sometimes they might just sit there as what's known sometimes clogged losses, like they don't do a lot. But in general, if you've got capital losses and you've got other gains, you can often offset them between them, but there are restrictions to those. And that's probably another video, but know that, yeah, losses, as sad as it is to lose money, are quite often going to be tax relievable in some way. In the limited company, it's a similar idea. You know, if you make tax losses, you can use them against your future profits. And sometimes actually the limited company tax law on losses is a bit freer. Not always, but sometimes it's a bit easier to do things with the losses. But in either scenario, normally the losses are relievable against something, but it really depends on what lost the money, because in some cases they're going to be restricted.
Right, so some good news there, but personally, I'm not going to be investing in anything that risky, so touch wood, I won't need to worry about that. Anyway, I really hope this has been a useful guide to explain what you can invest your business cash in. I'll be more than happy to go into more details and anything, so do let me know in the comment section if you have any more questions. If you want some future videos on this topic or a more in-depth guide to the investing side, do let me know. I'll see you in the next video. Happy investing.